Before I start the presentation, I just wanted to thank you all very much for being here. We have a great group assembled today. So first of all, I'd like to express my appreciation to our board of directors for their significant work and dedication to the company. Also members of our executive team. We've got Ben here, our company secretary, and also Brucey and Todd up the back. All of our shareholders and also guests who have come from a long way away in the Northern Territory. I want to stress that we as a company actively seek to engage with a wide range of people, not only those who support us, but also those who have concerns about our activities. And, we look forward to continuing that dialogue. So thank you all very much for coming today. So Empire is going through a pretty exciting phase as a company. Over the last year, we have raised a fairly substantial amount of money. We've progressed our plans to move into pilot development on the Carpentaria project, including acquiring a gas processing facility from AGL last year. We're working through a range of regulatory approvals at the moment, and all things going well, we hope to be in production in approximately the next 12 months, which would make us the first company to commence sales out of the Beetaloo. So first of all, just a few sort of high-level highlights on Empire as a company. So first of all, the reason that we're focusing on the Beetaloo Basin is that it is a truly world-class gas resource. It's the third largest shale gas deposit on Earth. It has highly attractive geological characteristics that put it on a par with, if not better than, some of the most prolific US shale gas basins. It also contains extremely low levels of carbon dioxide in the reservoir compared to other sources available to us in Australia. And recent results by Empire and our neighbours in the basin have indicated that this can be an economic development. So we're very excited to be playing a leading role in the development of this asset. Not only does the Beetaloo contain an enormous resource, but also the shale sequences in it are incredibly thick, and they're what's called a stacked pay, which is 4 layers of hydrocarbon-bearing rock on top of one another. And so that's going to provide opportunities for scaling up through drilling into multiple layers in future, which would also reduce the footprint of our activities, because we'd be drilling multiple wells from each well pad. We have an extremely large acreage holding in the Beetaloo. Our total acreage holding is over 29 million acres in the Northern Territory. Our position within the Beetaloo Basin is about 3 million acres. I should stress that we never expect to drill anywhere near 29 million acres or even 3 million acres for that matter. There are areas of higher and lower prospectivity, and the area we're focusing on, the Carpentaria project, represents about 100,000 of those 29 million acres. We own and operate all of our acreage with a 100% working interest, which makes us fairly unique in the Beetaloo Basin. That was a deliberate strategy of ours to hold on to a high working interest as we move through the exploration and appraisal phase, because we believe that will give us maximum optionality around selling down to an industry partner in future. Our resource base has been independently assessed by Netherlands Sewell & Associates, who I believe to be the leading independent resource assessor in the oil and gas industry, particularly in the international space. And they have assessed that we have over 47 trillion cubic feet of undiscovered recoverable gas, and we've converted about 1.6 TCF of that to contingent or discovered resource with limited drilling. It's our intention now in this pilot phase to look to move into booking 2P reserves, which is a resource category that shows that you've got an economically viable resource. As I mentioned, recent activity by us and others has demonstrated commercial viability. Australian gas prices are much, much higher than those in the US, which provides a very strong market for us. And as I mentioned, we are targeting sales ideally by the first half of next year. So just a bit more on our position in the basin. As you can see on this map, we hold all of the acreage in the red colour on this map. The Carpentaria project is on the eastern side of the basin, the Western Beetaloo project being the properties we acquired from Paul Fudge's Pangaea Resources sit on the western side of the basin. Our acreage contains the thickest shale sequences in the basin, and you can see that from this map. So in the Carpentaria area in particular, we have over 300 metres of gross thickness of the shales. The relevance of thickness is that when you fracture stimulate these rocks, the fracks tend to move about 25 to 50 metres away from the wellbore. And so if you've got, say in the Marcellus Shale, you'll have a 20 metre thick sequence of shale rock, so you're opening up 20 metres of rock, whereas in the Beetaloo with a 50, 60 metre sequence, you can open up a lot more rock and recover more gas. I should stress that these shale sequences are located over 1.5 kilometres below the nearest aquifer, so there's an incredibly thick barrier between the shale sequence and the aquifer. The regulations require us to be at least 600 metres from the aquifer, but we are 2.5 times that. The relevance of a stacked play is that it will improve development economics down the track. So on this map, on this slide, you can see a log section for the Marcellus Shale where it says single reservoir. So essentially that is the thickness of the Marcellus Shale. The Marcellus now produces around 25 billion cubic feet of gas a day. In America, it's about 25% of US gas supply. It has really driven US gas prices to the most affordable in the world. And also, due to the relatively lower carbon intensity of gas versus coal, it's actually been a major driver of emissions reduction in the United States, not due to mandates, but due to economics. So gas has become cheaper than coal. That has displaced coal, and as a result of which, the US is now one of the leaders in the world around reducing its aggregate emissions. In the Beetaloo, as you can see on this right-hand log section, we have the stacked play. So when we drill development wells in future, we'll be able to get around 30 wells from each well pad, and so that means recovering more gas with less disturbance of the land. Our appraisal activity has now delivered the Carpentaria project. Empire is very focused as a company on capital efficiency, and we're very proud of our track record of doing more with less from a capital perspective. So over the last 4 or 5 years, we've done 2 seismic surveys. We've drilled 2 vertical wells, Carpentaria 1 and Carpentaria 4, 2 horizontal wells, Carpentaria 2 and Carpentaria H. Carpentaria 2H and Carpentaria 3H. We have carried out 61 fracture stimulation stages without screen out and safely and effectively. And we've done all that for about $90 million of investment, which is a small fraction of the investments that our peers have made for similar activity. We believe that we have achieved commercial flow rates, particularly on the Carpentaria 2H well, and we have delineated approximately 200 drilling locations across the B Shale and around 600 drilling locations into the other zones. I should really stress that it's not our present plan to go out and drill 800 wells. We are in the appraisal phase. We are looking to demonstrate long-term commercial viability through the drilling of our next well, and then that will give us indications as to whether or not we can move into a larger scale of development. Now that we have delineated a large resource and flow rates within EP 187, the company's principal focus, as our chairman just mentioned, is to commence a pilot project in the Carpentaria area. While the pilot project will bring us revenue from the Beetaloo for the first time, which is a very exciting prospect for a small capital hungry company, that is not necessarily the predominant goal of this pilot project. The key goal of this project is to really delineate this resource, demonstrate commerciality, and by selling the gas rather than flaring it, it will allow us to recycle capital, but also it will fundamentally reduce emissions associated with flaring. To that end, the Northern Territory Government just last week, or in the last week or two, installed what's called a T-piece into the pipeline, which is the pipeline connection at our location along the pipeline. So we have now access to the market, and also, as you're aware, we acquired the Roslyn Park gas processing facility last year. That gas processing facility has been removed from Roslyn Park on Sydney's southwestern outskirts. We've sent it to Roma, where it is now undergoing refurbishment, and subject to the timing of regulatory approvals, we expect to send it to the Beetaloo for installation later this year. Recently, Empire Energy raised $47 million under a placement, and the predominant use of funds under that placement will be to drill the Carpentaria 5H pilot development well. This well will be drilled from the same well pad as Carpentaria 2H and Carpentaria 3H. It will be drilled parallel to Carpentaria 2H, which was a well in which we identified better geological conditions for drilling. It will have a 3-kilometre horizontal section with approximately 60 fracture stimulation stages. And we have engaged leading US shale experts to assist us with the design of that well, with a focus on increasing productivity, which is very consistent with the US shale gas experience, where the more wells you drill and the more you learn how to execute your programs, the more you can increase the productivity of your drilling. As I mentioned, the focus of our company in this next phase is really on driving productivity improvements. And again, this was the learned experience in the United States. I remember reading a fantastic book called The Frackers, which talks about the pioneers of shale gas in America, and their light bulb moment where they worked out shale gas was going to work was when they drilled a well called SW Griffin number 4, which was in the Barnett Shale. The Barnett sits underneath Dallas and Fort Worth, so if you're ever flying through Dallas-Fort Worth Airport, actually have a look for wellheads, because there are wells on the airport itself. That was a well that produced around 1 million cubic feet a day. Now in the major shale basins, they're getting flow rates of 30 million cubic feet a day or more. So there's a demonstrated learning curve. In terms of the key areas in which we see opportunities for productivity enhancement, so the first 2 horizontal wells we've drilled had a 4.5-inch horizontal cased section through the shale-bearing rock. We are now moving to 5.5-inch casing. The relevance of that is that it allows us to push more water down through the wellbore and into the formation at higher rates, which allows for the creation of a larger fracture network, and therefore you're recovering more gas. Also, there's a big area for productivity enhancement in the stimulation design. So when we stimulate these rocks, which is essentially pushing water and sand and a small percentage of chemicals that you'd find in your own household, you push them down the well to create the fractures in the rock. And there are lots of different ways of doing that. We have carried out some really leading research and development activities to start trialling these different methodologies, and we're really starting to nail down on which ones will be most productive for us going forward. And there are also opportunities for enhancements around flowback, which is essentially the rate at which you open up the well to flow the fluids back out and also the gas in order to keep the fractures open. So Empire's focus right now is very much on delivering the Carpentaria pilot project, but this does create an opportunity for further growth. So our constraining factor in the pilot phase is the size of the McArthur River pipeline, which could take about 25 terajoules a day. It would be 9 a day out to the McArthur River mine and about 16 a day in the other direction into the broader Northern Territory market. And that will allow us to continue evolving our strategy, enhancing economics, bringing down costs, and then ultimately in larger scale development scenarios, there is an opportunity for more drilling which can help provide gas to the desperately short East Coast market and also to growing LNG markets in Asia. Empire takes our ESG responsibilities extremely seriously, and I think it's important to note that ESG actually means environment, social and governance. I think in the modern world we live in, the focus tends to be almost 100% on the E in ESG and not so much the S and the G. Clearly, our environmental responsibilities as a company are very serious responsibilities. Natural gas is a hydrocarbon and a critical feedstock for everything we rely on in our modern daily lives, I should add. But we need to do everything we can to minimise our environmental footprint. So under the safeguard mechanism, we will be offsetting all of our Scope 1 emissions as required. Given the extremely low CO2 in our gas resource, that would only represent a couple of % of our total gross revenue. But we are also very focused in terms of the localised environmental impact on minimising our impacts. So we operate on Aboriginal land. This is the only tenement in the Beetaloo that is on Aboriginal land as opposed to native title land. And extraordinary measures are taken to ensure that we minimise our environmental footprint, but also to ensure that we are respectful of the people on whose land we operate. So as an example, extensive cultural heritage clearance activities are carried out. They're carried out by the traditional owners, not by us. Those traditional owners are appointed by the Land Council, not by us, to ensure that there's no undue influence. Archaeologists are present during these clearing activities. And also we are required to have the full and informed prior consent of the traditional owners to carry out our activities, which we gained a number of years ago. And furthermore, we consult with traditional owners very regularly in order to explain to them what we're working on and what we'll be doing next. And we're going through a process at the moment of seeking the consent of the traditional owners to commence production and sales of our gas, and we will not sell gas until we have that consent from the traditional owners. As I mentioned, it's not only about the E, it's also about the S and the G, and so to that end, Empire has been going through extensive and broad community consultation processes. We have carried out consultation sessions right across the length and breadth of the Northern Territory, and we actively encourage all affected stakeholders to attend those sessions and tell us their thoughts, and we can also give them an opportunity to hear about some of the protections we put in place. Very recently, it's been very pleasing to see the federal government, after what I must admit was a fairly rocky start for 12 or 18 months, come out and recognise the critical role of natural gas in the energy transition. Just a couple of weeks ago, the Australian government released its future gas strategy, which is a medium to longer term strategy paper around the role of gas, and particularly in relation to the transition to net zero by 2050. Some relevant quotes from that gas strategy from Madeleine King, the Minister for Resources and Minister for Northern Australia, I think are worth reading out. So Minister King said, "The future gas strategy makes it clear that gas will remain an important source of energy through to 2050 and beyond, and its uses will change as we improve industrial energy efficiency, firm renewables and reduce emissions. It is clear we will need continued exploration, investment and development in the sector to support the path to net zero for Australia and for our export partners, and to avoid a shortfall in gas supplies." So it's fantastic to see the federal government recognise the critical role of gas. There is also very strong bipartisan support for our industry in the Northern Territory from both Territory Labor and the Country Liberal Party. The recently appointed Chief Minister Eva Lawler has shown particular support for us, as our chairman noted during his address. The reality is that Australia, Asia and the world need new sources of gas. Just looking at the Northern Territory market, our initial target market for pilot production, the Northern Territory market is it's currently suffering critical gas shortfalls. So Darwin is solely reliant on gas to keep the lights on. About 80% of power generation in Darwin comes from gas. There's a field called Blacktip, which is a shallow water offshore field located off Darwin that's operated by the Italian National Oil Company that has gone through precipitous declines in production. And you can see here on this chart the drop in production just over recent months. This is a field that is selling gas to Power Water Corporation, an arm of the NT government. It should be delivering 104 terajoules a day. It's currently delivering, Ben, what's the rate today? 15 TJs a day. This has forced the Northern Territory government to buy what's called emergency gas from the LNG exporters. And while the price they're paying for that gas is confidential, ultimately, if you're an LNG exporter, you can choose between selling it at, $12 or selling it into the local market. And so the Northern Territory government needs new sources of supply. They've recently signed a gas sales agreement with our neighbour Tamboran Resources. And while I need to be careful what I say, I would note that the Chief Minister on the day that was announced did state that they were looking for other sources of supply from the onshore sector, but I'll just leave it at that. Australia's east coast is also facing chronic shortages in the years ahead. There's been talk of potential gas outages or shortfalls as soon as this winter, if not next winter. This is due in large part to the decline of the fields in the Bass Strait. The Bass Strait fields have been an incredible economic blessing to our country. Over 7 trillion cubic feet of gas has been produced from those fields and 2 billion barrels of oil, giving Australia, and particularly its East Coast, energy independence for decades. But just last year, those fields fell in aggregate by 25%, and so new sources of supply are needed. And we believe the Beetaloo is perfectly suited with its low CO2 gas to make up for those shortfalls. Furthermore, LNG demand in Asia in particular is growing dramatically, and Australia has an incredible opportunity to further benefit from the gas export industry, which I think in the last year created about $80 billion of export revenue, tens of thousands of direct jobs and hundreds of thousands of indirect jobs. And the beauty of the Beetaloo is that being located onshore in the Northern Territory, the Northern Territory government will receive a 10% wellhead royalty, which will, in my opinion, give the Northern Territory government independence from the federal government, on which it relies for distributions to fund 70% of its expenditure. And ultimately that means more services for Northern Territorians and fundamentally a better standard of living. The Beetaloo is located very strategically near the major demand centres for LNG around the world. So to put it shortly, there's nowhere closer to the major LNG demand centres for major LNG supply than Darwin. So in terms of our value proposition, the pilot project will deliver up to 25 terajoules of gas a day, targeting first revenue next year. That will allow us to start maturing our resource delineation. And as I mentioned, we've secured a gas processing plant. Phase 2 could involve delivering approximately 200 terajoules a day into the East Coast market. And ultimately, phase 3 could be significantly larger than that, delivering into LNG. In terms of what we're focusing on right now, the company is in an extremely busy and exciting phase. So we are negotiating a gas sales and transportation agreement presently, and we hope to be in a position to share news on that with the market shortly. We're negotiating drilling rig and stimulation spread contracts. Just in terms of stimulation, one very exciting development is that Liberty Energy is now entering the Australian services sector. Liberty is the second largest provider of stimulation services in the United States. It was founded in about 2015, where its founder, Chris Wright, who is also its CEO, recognised that shale gas in America the techniques could be applied to shale oil basins, and now the Permian Basin is an incredible blessing for America. I think it produces more more oil than Saudi Arabia. They are bringing a fracture stimulation spread to the Beetaloo, arriving soon, and that will allow us to carry out stimulation operations more efficiently. We are very well advanced on our regulatory and Indigenous approvals processes. So we have submitted all of our regulatory documents, which was an enormous undertaking by our team, and we're very grateful for all the hard work of our executive team and our operations consultants and environmental consultants for pulling all that together. And as I mentioned, we are working through the Indigenous consent processes presently. We will then be carrying out the drilling, stimulation of flow testing of Carpentaria 5H later this year. We're working on various financing structures to fund the surface facilities with a focus on minimising dilution to shareholders. I would note that we've got an existing credit facility in place with Macquarie Bank, the team I worked in for nearly 10 years. But we've decided to appoint a debt advisor to ensure that we can get the best deal for shareholders possible. Following the securing of that financing, we would be constructing surface facilities, and that would allow us to commence pilot gas sales. And so on that note, I thank you again for your attendance, and we'll press on to the next item, Peter.